Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in the last video we talked about 5 companies that are dividend growth companies. Some of those companies were paying basically growing their dividends over the last 5 years, double digits over the last 5 years, and all of them were undervalued. So if you haven't seen that video, go and watch that video first. And in this video we're going to talk about 5 companies that are high growth companies. So these are companies that grow their revenues quite fast and EPSs and so on, and they all seem undervalued at the moment. A lot of them are trading and basically below their fair values according to Morningstar. So I'm going to share the information with you guys, but before we do that, as always, if you can press that like button, really genuinely helps the channel. And of course, if you can join us in the Patreon account, where you get access to a lot of things, including the family portfolio, all the buys and sells, all the dividend trackers and so on. And then top of that, you get the Discord, where a lot of brothers are sharing very good practices. So yeah, join us if you can. There, you basically right now it's a half price, so yeah, don't miss out. So it's sort of a Ramadan kind of sellout if you basically think about it. Now what we're going to talk about now first is the S&P 500, and in year to date we are basically in the red, okay, apart from the FTSE 100, which is done really good. And I'm actually currently putting together a video for us, look at the FTSE 100 companies. Inshallah, I will share that with the community very soon. But yeah, so as you can see, the FTSE is doing well. Everything else is basically in the red. For the last 6 months, though, it's basically slightly different because some of them are flat, some of them are slightly high and basically up. But for 1 year, that's when you will see a lot of basically, 10% for the S&P 500, Dow Jones about 7%, 10% for the Nasdaq 100, and about 11.7% when it comes to FTSE 100. So yeah, the overall markets are not doing great just right now, but when you zoom out, okay, especially when you look at the last 5 years or so, you'll see these companies have done absolutely amazing job, and this is what matters. And I think I was talking to one of my mates who just does not invest in the stock market, but he invests a lot in crypto and so on. And we were talking about today generally like what we've seen basically over the last 5-6 years or so in the stock market. And basically one of the things that I have seen is, imagine you've invested basically just a VO or the FTSE, basically or FTSE 100 or whatever, right now you would be up over 100%, and that's what matters. Over a period of time, 7 years, 10 years, 20 years, you will be up a lot. Right now the prices might go up and down. We might have a year where it's a decline, but the next year we might bounce back. So imagine this year we're down 10%, next year it might be up 20%, and the year after 20%. So this is what I've been trying to tell the community, just not to worry too much about just what's happening right now and just focus in the long run. And of course, when you see something like this and the daily prices of these stock prices and whatever, that doesn't really matter. Just focus in the long run, and that's what's important to us. You've definitely seen my portfolio take a hit over the last few weeks, and even if we look at the last 3 months, for example, there was a point where it was £124,000, and we were up quite a bit, but since then it's actually come down to right now about 16. And remember, I've added quite a bit of money over the last few months, and this also includes these £700, over £700 that's sitting there, which I will be investing basically in next week. So yeah, so it's not just basically just the price, the portfolio went down and I haven't added any money. I've actually added quite a bit of money, but at the same time it's down quite a lot, over 7,000, 10,000, whatever it is. So yeah, just bear that in mind. Just think about the long-term plan. Think about 5 years from now on, would you be looking back at this as an opportunity, or whatever the case might be. Right, as always, I'm just going to share with you guys these 5 companies, and as you can see here, what we're looking for is the market cap. We're looking for the moat for the company. We're looking at the 5-year revenue, where the company has been over the last 5 years in terms of revenue, in terms of EPS. It's not going to tell us what's going to happen in the future, but if it gives us at least an idea and so on. We will check the profit margins, return on equity, return on invested capital, the free cash flow margin, EPS growth for next year, revenue growth for next year, Morningstar valuation, and then the fair price for each stock. And the first one that we're looking at is, no surprise, is AMD. AMD is in this list because it's undervalued at the moment. $140 per share is where they think the price should be. It's 4 stars according to Morningstar, and if you look at the expectations in terms of growth side of it, look at that. 42% EPS growth expected next year. Revenue is expected about 23%. And profit margin, return on equity, return on invested capital is not the best at the moment. Currently, there is trading just over $100 per share. And as you can see, is 140 is where they expected the price should be. And if we look at the value, basically the financials for this company, and I've been sharing this for the last few weeks, but right now you can see it's basically used to be about 2015 is about $4 billion to right now $25 billion, $25.7 billion. And check this out, about $12 billion of that is basically the cost of the revenue. So the gross profit, we're looking at about almost $14 billion. And of course, the company spends a lot of money in research and development and so also all these things. But the net income is $1.6 billion. EPS is basically went from negative to positive. So it is still growing company. And if we look at the earnings expectations, we've already seen this, but look at that, 34% the following year in 2026. December 2026, we're expecting 34% basically year-over-year growth. And then after that, we're expecting 19, almost to 20. And there's 11 analysts looking at that. Now, if we look at the revenue side of it, 23%, 21%, 8, basically 14%, 15% almost. So it is the company that is heading the right direction, but right now the price says otherwise. And when we look at the ratings, for example, you can see Wall Street and Seeking Alpha both agree that it is a buy right now. On Wall Street, the same 26 strong buys, 8 buys, 14 holds, and 1 strong sell. Buy rating right now, and as you can see, is almost a 50% basically upside from where we are, $147 per share. And right now is just 100, so that's basically $7 per share from where we are now. So it seems a great company. It's in the right direction when it basically looking forward. But yeah, so we'll see where it ends up. But for now, there is definitely a strong buy. I do own this company in my family portfolio. If you want to see how many shares I've added, basically I've actually added to it recently, how many shares I own and so on. You can join us on the Patreon account where you get access to that, inshallah. Please do like the videos if you have not already. The next one that we're looking at is a Fortinet. This is another company that I own in my family portfolio, 7.5 billion market cap. White mode, price is $96 per share right now. And as you can see here, the last 5 years, the revenue and the EPS has grown absolutely massive. Basic return on equity, return on invested capital, all of that is absolutely by far one of the best. Free cash flow right now, we're looking at $1.8 billion, free cash flow margin of 21%. They're expecting the EPS to grow about 4%, but the revenue about 14%, which is good to know. Right now, the price is $96 per share. They expect the price to be $108 per share. And as you can see here, for year to date, the stock's just up about 2%. Last 6 months, about 26%, but just this month has done about 12%. Now, if we look at the financials first, you can see from $1 billion to right now almost $6 billion. The cost of the revenue about $1 billion. Gross profit of 4.7. That's why you've seen high gross profit, because they're making about 6 billion and keeping about almost 5 billion of that. But the net income, okay, look at that, 1.7 of that, basically 5 billion, which is really good to see. And EPS over the last whatever years, it moved from 1 cent to right now $2.28. So it's a growing company. It's heading the right direction in terms of earnings expectations. Let's have a look. We've seen that 4%, but in the following year, they're expecting the earnings to grow about 13%, 14%, almost 20% the following year. So if we just focus on the first 3, that's basically what's happening for the next 3 years for this company. When it comes to revenue, 13%, and then 16% if you just again looking for the first 3. So nothing absolutely to worry about. On Wall Street, I'm actually saying is a hold right now. Basically, we got 8 holds, basically 8 buys, 8 strong buys, 8 also buys, and 25 holds. So that there's, for that reason, is actually a hold right now, and 2 strong sales. And as you can see, it's 18% upside from where we are. $114 per share is where they think the price should be. The next company we're looking at today is Adobe, 191 billion market cap, white mode. It has come down quite a bit recently in the last few days because of the earnings report that came up. There was nothing shocking in that basically earnings report. However, some of the guidance was slightly lower than what Wall Street was expecting, as usual. That's basically what Wall Street does. $590 per share is where they think the price should be. Right now it's below 400, and basically the company is actually doing really well over the last 5 years. Profit margin, return on equity, return on invested capital, absolutely amazing. Almost $8 billion of free cash flow margin of 14%. EPS is expected to grow about 11% next year. Revenue is about 9%. And the fact is, you see all that, and then you see a company that's down so much. And all of it is because the speculation with the AI, they've came out and said, you know what, we are actually monetizing when it comes to AI next year, basically this year. And still that didn't matter to Wall Street. So a year to date is down about 11%. For the 1 year, it's about 30%. If you just look 1 month, it's about 14% down. And the last 5 days, about 10% down. So right now they have a forward PE of just 19. Financially, if we look at this company, from $4.7 billion to $22 billion, and guess what? Cost of that revenue, basically $2 billion from 22. They're keeping almost to 20 billion of that as a gross profit. And on top of that, you've got a lot of research and development and all of that things, and then net income of almost $6 billion, $7 billion. Look at the EPS growth from $1 to right now $15. So this is probably one of the best companies out there in my opinion, but people don't actually seem to like the company, which is fine. Okay, this is why you buy high quality companies when they're discounted, when Wall Street is not looking at. Okay, that's when you buy this type of companies and you hold them for a long time and actually leave them alone. Now 11, when it comes to 11% right now, the year-over-year growth, and then 12% for the following year, about 12% the following year as well. And then you look at revenue, almost 10%. 10% again, another 10%. So nothing genuinely to worry about. And Wall Street is actually saying it's a strong buy, right? Basically, it's a buy right now. 18 strong buys, 9 buys, 11 holds, 1 seller, 1 strong sell. But overall, it's a buy rating. And you've got about 35% upside from where we are. $534 per share is where they think the price should be. And as you can see here, we've got $590 per share. So overall, great company, but right now down a lot. The next one, you might be actually surprised, because AppLovin is one of those companies that's done absolutely amazing. Let me just quickly show you here. It's done ridiculously crazy. Let me show you for the 1 year. 363% basically up that 1 year, and year to date about 10% down. Last 6 months 151% up just in the last 6 months. So you might be thinking, why the hell have you included this? But according to Morningstar, it's actually saying $282 per share is where they think the price should be. Right now it's slightly higher than that, so it's actually potentially is 3 stars now. So soon it might actually come back down to proper fair value. And then even if we continue doing what we've done in the last few weeks, which is the S&P 500 going down, I don't know, 2-3% each day, then potentially you might get a great opportunity with this company. Now 92 billion market cap. It has a wide moat basically when it comes to the 5-year growth rate for the revenue, EPS absolutely amazing. And I think this EPS is not the 5 years. I think it's about 3. No, that's for 1 year. Sorry, this is for 1 year, and return on equity is also for the 1 year. No, return. Yes. Wait, let me double check. It was just the EPS. So the EPS basically growth for the last 5 years is not 5 years. It's just 1 year. I couldn't find one for the last 5 years, so that's the reason why I said that. Everything else, it seems absolutely amazing. Free cash flow $2 billion. Free cash flow margin of basically 61%. Now that's also 1 year. So these two information is basically based on 1 year, basically last year. EPS growth expected to be about 46%. This is why I included it here. The fact that it's still not undervalued, okay, and basically still not undervalued yet, but it's heading towards that. And also the top of that, you've got the massive growth here. 46% revenue growth is expected to be basically about 22% basically for next year. So if we go back here and we check the financials of this company, you can see in the millions to right now $4.7 billion. Basically you got $1.1 billion of basically cost of that revenue, $3.5 billion of that gross profit, and then you've got net income $1.5 billion. EPS, basic EPS from negative $1 something to right now $4.68. So there's a massive growth in terms of EPS and everything else. Earnings expectation is moving forward for this company. You can see 45% this year, 47% the following year, 22% for the following year. That's for EPS. Revenue 21%, 22%, 15%. So there's a massive growth. Basically they're expecting the earnings to grow massively, and Quant is actually saying it's a strong buy right now. Wall Street is saying it's a buy. If we look at this, 16 buys, 3 strong buys, 3 buys, 6 holds, 1 strong sell, and it's a buy rating, and they're expecting the earnings to be about the price to be $486 per share. So that's the average price. 66% upside from where we are, which is absolutely huge if you think about. So that's one of the reasons I've included this company. So we'll see how that goes. The final one is Shopify, one I have not spoken about for a very long time. 125 billion market cap, wide moat, $96 per share. Right, $94 per share. Right now you could see it's 120, expected to be about 120, so it's slightly lower than basically where they think the price should be. 3 stars right now. The revenue is growing fast, the EPS is growing fast, profit margin, return on equity is really good, return on invested capital about 10%, $1.5 billion of free cash flow, 187% when it comes to that free cash flow margin. EPS expected to grow about 19%, revenue is expected to grow about 23%. So again, another one that's undervalued but doing really good job, expected to grow massively next few years. So it's interesting. And if we look at where the company has been for the 1 year, 20.1%, a year to date is down about almost 11%, last 6 months up 28%, 29% almost, but the 1 month is down 24%. Quant, Wall Street, Seeking Alpha, all saying is a buy right now. If we look at the financials for this company, you can see from basically in the millions to right now $8.8 billion, $4.4 billion of the cost of that revenue. They take gross profit of $4.4 billion. And then if we look at the net income is about $2 billion. And on top, then you've got the EPS from negative to right now positive $1.57. Now, if we go to the earnings expectations moving forward, we've seen already that 19%, whatever, 23%, 27% of the following year, 32% of the following year as well. So if you just focus on the first 3, so we've got 39 analysts, 38 analysts, 13 analysts looking at this. Revenue side of things, 23%, 21%, 23% every single year. Even if you look at these as well, 20, basically 13%, 18% every single year. So expected to grow massively over the next whatever years. And if we look at the ratings again and look at the Wall Street expectations, we've got 23 strong buys, 12 buys, 14 holds, 1 strong buy and 1 strong sell, 1 sell and 1 strong sell. Now 42% upside from where we are, $134 per share is where they think the price should be. So again, another great company. There's absolutely nothing wrong with any of these companies. I would genuinely think this is a great opportunity. You might just want to wait if things do not improve in the stock market. These companies are quite volatile. By the way, you really need to be careful, especially this one here. This one can move 5% in each basically direction every single day. Same as basically AMD. They're quite volatile stocks, so you have to be careful. But in the next few months, we might get actually good opportunities. These are high quality businesses, and we might get them actually even cheaper. So that's the whole purpose of this video, and hopefully you learn something from it, and basically you can go away and do your own research. And as you can see here from basically Sharia compliance side of things, absolutely nothing to worry about. A lot of these companies, because the tech companies, they don't have a lot of basically debt, they don't have basically interest bearing securities and so on, and their business side of things is absolutely fine. Shopify is basically 97%, so 95% or more is basically what we're looking for. Overall, great companies. I would definitely do a little bit more research. I do own AMD. I do own I own the first 3 in my family portfolio. If you want to check that out, join us at the Patreon account, inshallah. Have a wonderful day. Assalamu alaikum.